Peter, maybe I'll ask you first. Do you think that we are entering a long-term sustained bear market? Is that what do you see a really unpleasant 5 years ahead, or are we, as lots of people rather hope, going back to our old normal next year?
It's very difficult to predict. When we had high inflation, which we haven't yet got, I mean, we had 25, 26% in the mid-70s, it did precipitate a long recession and a long bear market. But as soon as inflation is under control, that inflection point, markets soar. So the biggest worry is it would be very brave for someone that was already in the market to come out. Because the day that people decide that things are okay, the market will soar and people will miss it. I know many people who've often claimed they got out at the top, but then when you ask them when they got back in again, they often got back in above the level where they got out. And so are we in for a long bear market? I think not, because I think there's a lot of artificial reasons for what's happening at the moment. And whilst the energy one might not be going away, I'm not sure inflation is that big a worry as it was. As I say, you know, the cost of energy is keeping inflation in other things down. So at some stage, people will think, well, actually, we're not going to have a period of inflation. If we do, the stock markets will go up quite a lot, and that will shorten any potential bear market. But it's always very, very difficult. And there's external reasons. I mean, if the war in the Ukraine escalates, that would be a big worry to the world.
Interesting, isn't it? It's one of the things that you don't hear talked about that much when we're talking about switches between bear markets and bull markets, that it's almost always something to do with a change in the direction of inflation. You know, inflation goes beyond a certain point, you get a bear market, and as soon as the numbers start coming around again, you tend to get a flip to a bull market.
Well, people always said in times of inflation, you should buy things because they're going to go up in value. And I think in the long term that's right, but the timing is normally quite wrong. To buy shares when inflation is happening, you're not good. The market isn't going to move then, but in long term it will. I mean, you know, they always said in times of inflation, borrow and buy a thing like property. But you've other things at play. No, not me. But the other things at play, and of course, interest rates are going to affect that.
Stephen, what are your views on the likely length of a bear market?
Yeah, I personally, I'm just more optimistic in general. I do recall when I was working as a fund manager back in 2007 and 2008, 2009. I mean, we had a global financial crisis. I mean, a lot of banks disappear. And at the time, I was quite worried about my career, as in like maybe there wasn't going to be a stock market anymore because every bank is just going to fall apart at the time. And I think if I just maybe compare what we are experiencing now versus what happened at the time 15 years ago, I don't think the fundamentals is that bad. I think that, I mean, we do have inflation issue, we do have the interest rate at a high level, but that's not really like something that is not manageable. At some point, interest rate could be cut. At some point, inflation would be lower, and then we were just going to recover, as in like a economic. On an economic basis, and some company valuation recover. So the other thing which I want to point out is that if you recall what happened during that time in 2008, 2009, after Lehman went bust, was that the market was really bleak for about 6 months, and I think the trough was in March 2009, which probably no one expected. But of course, if you look at the day-to-day life of many people who bought property at the time, and also if you're working in financial services, I think that that negative impact lasted for a lot longer than what the stock market would have done since the trough within like 6 month period from when Lehman went bust. So I think now looking at where we are now, if you follow the US market, it's down about 25 to 30%. We are already in a year now. And I think one thing that taught me over the years is never underestimate how efficient the market is. I think there's a lot of bad news that we read about, we talk about today, that's already been expected and priced in, and a lot of people have already raised some level of cash and just waiting for the right opportunity. It's a difficult call whether the opportunity is today, but I think we can see it coming in the next probably 6 to 12 months.